Welcome to the Trading Market Technicals Morning Call video for Thursday, February 28th, last day of the month. We had another big up day, follow through from Tuesday, and S&P up 19, NASDAQ up 33, Dow up 175 points, and the dollar did sell off a little bit. As I mentioned on our video yesterday morning, how the dollar to me looks like it's going to probably pull back, along with our sell signal in the VIX and the McClellan oscillator, which I also mentioned. So we did get that pullback, a little stronger pullback than usual, so I'm kind of surprised. However, volume was light. I'll show that to you in the charts moving forward. So Bernanke was speaking yesterday, day two, and the markets did like the ultra accommodation that Mr. Bernanke said that he will continue to do his bond buying purchase and flooding the market with liquidity. And the market's like that. And the reason why is because that's why we are at these levels, because Mr. Bernanke and the central bank have accommodated worldwide economies and have done their intervention. Now, eventually that's going to come to head, and the markets will react to that, and it's insane to say that Mr. Bernanke is doing this because everything is bad, but yet again the markets rally, and it really doesn't matter what I would think or anybody else would think. Price is what pays us, and that's the bottom line. So we want to make sure that are we coming to a head that we are here at a tradable top. Everything points to it that we are probably here at a tradable top, but price has not given us the confirmation that, hey, I'm going to start looking to get short. So the markets are still in an uptrend, and we still want to be looking to buy pullbacks as far as the day goes. Now, if the markets are weak during that day, then I would love to look to short rallies. However, what's been happening the last couple of days, and we have had a pickup in volatility, it seemed to me, from what I've been looking at, most of the indexes have been doing most of the moves, and stocks have not. So, and that could happen, obviously, other than the big high beta names. But if you're looking for stocks, we're at an end of earnings season, so that kind of dries up a lot of gap plays in the morning, and some follow through. A lack of news plays a big role. So a lot of the market participants like to go to the indexes as well. So just want to show you where we are in the last few days. And here's a 10-minute chart of the spiders. We had a small parallel channel here. We popped up another small parallel channel, and then we did another small parallel channel, hit the top, and then, of course, last Wednesday, after the FOMC statement, the last 3 hours we sold off, and now we've been in this little bit of a roller coaster ride with the indexes. So we are still in this channel, believe it or not, and the markets now have looked to pop up, and this is going to be a critical area to see if we really mark a top, and I'll get into the charts with you in a moment. But I want to run into a couple of indicators and just to kind of show you where we are at this time. Real quick on the econ data, we do have continuing claims, initial jobless claims. We have Chicago PMI, which is going to be also important. That also is a market mover, so just keep an eye on those numbers. Nothing at 10 o'clock, so all the numbers will be out after 8:30, and then it'll be either those numbers will play a role for the day, and then, of course, the technicals for the day, as well as anything else that comes out of Italy or Europe itself. Okay, so now I want to show you copper, and I mentioned that also. I said, watch, we caught that bottom trend line, as well as the VIX closed outside of its Bollinger Band. The McClellan also closed outside of its Bollinger Band. That produced a buy signal to the market for me when I had mentioned in the morning call video, as well as copper catching this lower trend line of the symmetrical triangle. Copper put in a black candle, possible reversal candle. I don't see copper really rallying at this time. I do see it probably being weak. Now, what could happen is copper, which did play a role last Wednesday, leading the markets lower, and then everything following suit, could actually be a little bit of a disconnect as well. So we just need to understand and watch price action with what the other sectors are doing right now. Take a look at the McClellan oscillator, and as you can see here, we did say that look at the outside band closes, we get usually the reversal, and sure enough, we got that here. We did pop up, we closed back outside it the other day, and we had a 2-day move higher. Now we're back up into this -3, so really telling us that we're in neutral. We have plenty of room to run to the upside and or to the downside. So, but you see what's happening here in the spiders. It is a line chart of the spiders, the SPX, excuse me. We are increase in volatility. And usually when you have a market top or a bottom, volatility starts to increase a little bit, and you'll get these larger range candles, and I'll show that to you in a moment as well. But if we take a look at the VIX, same thing here with that big move, and I mentioned 2 days ago, watch, we closed outside the band, and sure enough, now we're back inside the band again. So good signal, good indicator. I highly recommend that you put this in your trader's toolbox. For the longer term investor, really no need, because you're going to ride out these moves anyway. But something to really keep an eye on. I look at this every single day during the course of the trading day itself. Okay, take a look at the CBOE. We did have a little bit of fear coming in, but now we're just back into this 99 area here. Still above the averages, but again, volatility is picking up, so just something to keep an eye on. New York Stock Exchange 52-week lows. We did start creeping up above 70. Now we're back down here again, 20. So everything seems to be okay, so to speak, in this indicator. All right. So I want to run into one more chart is the dollar. And here's what I mentioned the other day. I said this is just a imaginary line where I think price might go. Price comes in a little bit, even if it catches the 200-day moving average, or even goes a little higher, making that higher low above this upper trend line here, and then starts to rally again. So that could take a couple of days, could take a couple of weeks, but this is why I think the market puts in a little bit of a bid here, and that'll be a great opportunity to short. Now, what we want to see in price, right? Here's the spiders, and as you can see, look what happened from last Wednesday. Down move, up, big engulfing candle, and now we took back 2/3 of that candle. And here's the spiders, and as you can see here, we're unwinding that overbought reading way back from the beginning of January 2nd, this December 31st. And this was the fiscal cliff issue being resolved. Now we have the sequester coming today, and that could really pop the markets again. If history repeats itself, this is the resolution here, and now we have the day today. So this could actually rally the markets again even higher. So this is why I say we need to have confirmation. And sometimes when that happens, you do miss a move or two. You're not trading as much because of the fact is the move has been already been in place, and you're waiting for that confirmation to happen, and things don't happen your way. But that doesn't mean that that you've missed anything. So you have a couple of days here just moving up and down. Volatility starting to pick up. So I think that we're starting to carve out a top here. Now, we have to look for the highs here. If we touch the highs or even get below the highs and start to fail again, that is what I'm looking for to say that the top is in place. This next rally is going to be key here. Now, today's the last day of the month, so there could be some window dressing and some follow-through from yesterday. So just be aware of that. And I would not be looking to short the market here. There are a few sectors I do like, which is going to be the banks eventually, but I'm not looking to short the banks at this moment, especially that the markets are a little bit volatile. I want to see the market start to roll over and start breaking some pivotal lows. This low here, as you can see at 148, is going to be key again, and you'll see this on the S&P cash chart when I show it to you. Now, let's get into the 60-minute. As you can see here, we did have markets big popped up again. We're back up into the well, we're not really overbought in the RSI as well as the MACD. Our stochastics 14.3, we are starting to read overbought again, but we're not overbought in the other two indicators. So we could have room to run a little bit, at least test the highs of 153. So this is the area here we're watching. As you can see, we hit that right to the button, and then we broke down below it, and then we actually rallied all the way up for the rest of the day on Tuesday and Wednesday, closing near its high. So this is interesting price action, but this is also telling me that volatility is picking up here near the tops. And here's the 30-minute Bollinger Bands. As you can see here, we're really wide. We're going to need a little consolidation to get those bands tight again in order to anticipate some sort of another big move. All right, now here's the cash. 1475 was my target. We missed it by about 8 handles. 1483, so close enough, right? But what are we looking for? The new area here, that 1495 and this 1483, 1484. We need to really start breaking these levels again. Now, we are coming into a top here. I don't want to see the market take out the highs if we're looking for that tradable top, right? Now, if the market starts to rally and takes out the high here, which the Dow did make a 4-year high briefly intraday yesterday, where the other indices did not. But that is also a good sign that bids are starting to step back in again. Now remember, when you have buyers buying up at these lofty levels, buyers, and the market starts to roll over for whatever reason, you're going to have these buyers trapped here, and they're going to look for they're going to be the first ones to get out because they are at these bought up at the high here. So something just to be concerned about. And again, we don't want to be looking to short the market as the market is rallying. We want to short when the market pauses, reverses, and takes out key pivotal lows. And that is what I'm looking for right now. Until then, we are day trading. We are looking for quality setups. And if there's none to be found, take a step back and we get prepared for the next day. And that's what keeps you alive in this market and this trading environment as well. Okay, take a quick look at a 60-minute. Big bearish rising wedge from the January 2nd, and as you can see here, price moving lower. We have some room to run before we get overbought again, guys. So that tells me that we probably could get a little more follow through today and at least get up to these test these highs areas. Now, where am I looking for? I don't want price to get above 1520 in the S&P cash. 1518, 1520, I do not want the price to get above it. If it starts getting above it on a closing basis and we consolidate, well, then we're going to be looking for a 1515 price target and then, of course, the all-time highs again. So that is what I'm looking for. Otherwise, we do not have a tradable top, and we have a continuation pattern of our trend to continue to at least challenge the midterm highs here, okay? So that is what I'm looking for in order for us to start looking to put in some shorts. Right now, we're looking to, unless you're trading intraday and you're looking for relative weakness to the market, we should be looking for strong stocks and looking to buy pullbacks, okay? 30-minute S&P, as you can see here, same thing. We rallied here, and this is just telling you exactly where we are here, right? Small little channel here. This is all just about all of January here, and all of February. So let's see what happens today. Today will be interesting. XLF broke out of a bearish rising wedge. We caught the 50-day moving average, have a doji, and now we roll back up, and we're testing the upper end of the trend line. So I would have no problem recapturing this, but I wouldn't want it to break the highs here and then start breaking out of this bearish rising wedge. So as of right now, I'm looking closely at the banks, and again, JP Morgan, Morgan Stanley are two of my favorites for now. Things can change, but I'm still looking for a price to fail here. Wouldn't want to go too far above the this bearish engulfing candle here on the XLF. Okay, diamonds, as you can see, we did make a tradable high intraday, and then we rolled back. We came back in and closed, but we did close above of this high area. So this is interesting developments in the Dow. But again, Dow is a follower, not a leader of the 5 sectors that we follow here. IWMs did have a nice move, not as strong as the other sectors, but again, price did move, and we can see the volume is a little bit lower when we have these sell-offs. The distributions are much higher than when we have our accumulation. And as you can see here, we unwound our overbought reading. So this here is actually helping the bullish case. So we'll see what happens if we catch this 20 and we start to roll back up again. So it'll be interesting to see what the IWMs are going to do. Transports, huge day, our leader, and this is actually helping the bull case that we literally took back 2 days of losses, and we came right back in to test those highs again. And we're sitting right on this trend line. And let me just get that up here. And we're in this channel, and you see this other rising channel here, along with this parallel channel. We just broke it. And now look what's happening at the Bollinger Bands. If you could see on this orange, we're starting to tighten here. So this is going to be really play a key role. Watch the transportation sector intraday when you're trading. Apple had a annual meeting yesterday. Nothing came out of Apple's meeting. Apple sold off again, down 5. Apple, this stock is sick. Unless you're trading it for a day trade, stay away. Do not accumulate this yet. This has a lot of work to do, has a lot of technical damage. It's dead money for now if you are a longer-term guy. Now, if you're trading it and you're having some good results, then stick with it. But if you're not trading it, I would not be looking to looking to get into Apple at all. I think it's dead money for the moment, unless it capitulates to the downside with real hard, heavy volume. All right, lastly is the Qs. We're back into this range as parallel channel here, all of January and all of February. This is another sector that I am interested in picking up to the long side. I'd like to see this come down a little bit, get everybody one-sided down to the sell side, and then really start to rally back up again, and that's where I'll be looking to get into technology. All right, guys, today's going to be interesting. Last day of the month, so keep in mind, remember window dressing here. We could get a little bit of continuation play to the upside, but then again, we start the new month tomorrow, and it'll be interesting to see what happens next week. Have a great day, everybody. Be safe out there. We'll talk to you tomorrow. Take care.